everybody, Brian Matthey from Verico, the Mortgage Professionals. Probably wondering why I'm wearing sunglasses. It's May the 31st, 2 straight days of sun. I have the short sleeves on, it's sunny outside. I'm just getting used to the sunglasses. It's been all of May with rain. It's very nice to wear them. But I may jinx things if I keep wearing them, so we'll take them off for this presentation. It's May the 31st, and today the Bank of Canada came out with their updates, so I'm going to go into that in a minute. But the first thing I want to do is I want to thank every one of you. As you probably know, we were chosen by the Canadian Mortgage Professional magazine at their awards in Toronto as Canada's best mortgage brokerage company. It was an honor for us. There were 8 companies across Canada that were nominated. We were very, very surprised to win the award. But really, it's thanks to you guys that we're there. Without having you guys as clients, without you having the confidence to come to us to know that we're doing a good job, I don't think that we would have been chosen. So we're very proud that Little Kingston's represented on a national map as Canada's best mortgage company, and thank you very much. At the Canadian Mortgage Awards, they were talking about some statistics for our industry. And one of them that came up was that mortgage brokers represent about 30% of all mortgages in Canada. Now that's a pretty good statistic when you consider that in the early 80s and through even the early 90s, mortgage brokers were considered as the lenders of last resort. And we've done pretty well getting that reputation out there that we're here, we do things different, and we do save money for our clients. But what really impacted me was that 70% of people out there don't really know what we do. So as an industry, we really haven't done a good job in telling the public what we do, how we do it, and how we save people money. So I've developed a series of videos, and they're just in production right now. It's called Mortgage Straight Talk. And there's another link in this email that I sent you today to a Straight Talk video. You'll see the second link, so please feel free to go there. It's just a sort of an introduction as to what Mortgage Straight Talk is about. It's going to be a series that delves right into the background of the mortgage brokerage industry, its history, what we do, how we do it, and talking about a lot of tips and strategies that we use as mortgage brokers that help our home buyers and homeowners save money. You'll also see at the end of this video a link to YouTube that you can subscribe to my videos. All you have to do is go to YouTube, hit subscribe, and anytime I post a new video, you'll have an update. And I need your help. If there's anybody out there that you know that has a mortgage coming due for renewal or is purchasing, anything to do with a mortgage, and they need an honest opinion about what they should do, please feel free to pass my videos on to them. We're trying to get the message out there about what mortgage brokers do, and essentially, we save our clients money. Okay, let's talk about the Bank of Canada. The Bank of Canada came out today, May 31st, and their next update's July, but it was widely expected that the rate was going to stay the same, and it did. There was no increase. They said that in the first quarter this year, they saw some inflationary pressure. The inflation rate was 3.9%. That was primarily due to business investment, but there was less government spending and less household spending. In the short term, they expect that the consumer price index is going to go back to 3%, and they're looking to get it back to 2% by 2012. But there isn't any inflationary pressure out there right now. I told you before about the Canadian dollar and how the Canadian dollar impacts things. Well, the Canadian dollar is actually having a downward pressure on inflation. It's affecting our exports, less exports. It's also decreasing pricing on imports. So both of those are anti-inflationary and is having an effect on how the government looks at CPI going ahead. Interestingly enough, in this increase, or sorry, in this rate announcement, there was no hint of a rate increase. What they said is any increase would have to be carefully considered. So some economists are saying that they think we may see something by September, but they talked about this 2% target by 2012. So my thinking is, in the absence of any inflationary pressure, we're probably going to see rates stay where they are. So we'll just have to see how the Bank of Canada looks at it. But again, they're being very, very cautionary. In past situations where we've been in recession and come out of it, I've told you that the Bank of Canada has increased rates too quickly and too soon and sort of pushed us back into that recession. So they want to be very careful this time that we're on that road to recovery. In the last couple of weeks, there's actually been a couple of small reductions in long-term rates, and long-term rates are now down below 4%. Now, there's one thing I want to relate with Bank of Canada and your variable, and I want to talk about an inflation hedge calculator. I'm part of a cross-Canada group who develop tools to help mortgage brokers explain to their clients the best route that they should take, whether it be fixed or whether it should be variable. And in the past, I could give you the benefit of my experience and the benefit of my reading and listening to what the economists are saying to help you make the right choice as to what's the best decision for you. The inflation hedge calculator is an Excel spreadsheet that allows me to take a look at your mortgage now, actually make an estimate of where rates could be in the future, and show you how to hedge yourself against inflation. But more so than that, it's got a really interesting scenario in it that I played around with. And I took a 4% fixed rate mortgage against a variable currently on a discount, and I compared the two, and I did it over 5 years. So a 4% fixed rate mortgage, I took a variable rate right now, and I said, what happens if the variable rate increases by 1% per year every single year for 4 years? Now, when I set up a fixed and I set up a variable, as I've done with most of you, I set up your payments so that your payment's exactly the same as a fixed, so you don't have any payment shock, and that's the exact scenario that I did here. What happened was, at the end of 5 years, the balance of both mortgages was exactly the same. So that's a pretty conservative estimate when you consider I said that we were going to have 1% increase per year for every year for 4 years. And if you go back in the history of the Bank of Canada rates, you will see that that has never happened in its history. Rates have gone up a couple of years, they've gone down a couple of years, but there's never been a case in the Bank of Canada rate history where rates have gone up by 1% per year consistently. So, if you're looking at your variable, if you have a mortgage coming due, or you know somebody who has a mortgage coming due and they don't know what to do, please feel free to call me, set up an appointment, and I'll show you this. It'll give you a really good handle on where your mortgage could be in the future, where it is now, and whether you choose fixed or whether you choose variable. That's it for today's updates. Again, take a look at the Mortgage Straight Talk video. Hope you enjoyed it. Thank you very much for your emails on the last batch of videos that we've sent out. I'm Brian Matthey from Verico, the Mortgage Professionals, and thank you for allowing me to be your mortgage professional.